but we're going to be talking about finance today, specifically around finance reporting, L10s, vendor management, AP, AR processes, and then platform review. We're just going to talk about how we can get this sacred cow from our CEO and his spouse or her spouse, because usually that's where it lives. Almost every small to medium-sized business I've seen, it starts right. Your money is your money, right? It's usually the last thing to go. It's usually the last thing you're going to hand off, because it's yours, and then you hear all those scary stories of fraud out there, and you hear all the people talk about, oh, don't trust this with this, and you can't go this way with that. And so what it causes people to do is really latch onto it and pull it tight to their chest. But the downside can be the people that usually got us to where we are now aren't always the people that can take us to the next level. And you start feeling this anxiety in CEOs. I think that's one of my favorite parts about my job is being able to be like a trusted confidant. And so they'll talk to me in ways that maybe they're not going to talk to their team, or maybe even talk to their spouses, but they'll say, hey man, like, and anytime the subject of finance come up, I feel like I have to always give them a little bit of nurturing, because anytime it comes up, it's always like, hey, I'll let you check out my finance, but it's not the cleanest thing you're ever going to see. It's always that, always give me that disclosure, almost like you're walking somebody into the recesses of a home, like your home, in that room that you don't want anybody ever to go into. And you're like, hey, before I open this door, just know it might not be all that great inside there. Or maybe if you have kids, you invite people over to your house, they want a tour around the house, and maybe the kid wrecked some of the rooms, and you're just like, okay, so hey, this is my daughter's room, and I can't promise what it's going to look like when I open the door. That's how a lot of CEOs and spouses treat finances, even after they've had super successful growth. They've experienced amazing things, but like it's that area of insecurity. Taryn, what do you think about that?
I agree 100%. I know I've been given access to things they wouldn't give their employees access to, just because we are like the trusted outsider. So especially when it comes to salaries and pay, a lot of HR wrapped in that too. But yeah, finances, bank accounts, QuickBooks, like, it is nice to have that trusted advisor that doesn't even really care what the numbers are, what they mean. They just want to help you get it right. And so we interpret it in a different way than like an employee jumping in there and be like, you have this much money in your bank account. What?
Even as Ben and I put together different kinds of reports for the brick and mortar side of things. A lot of times with coffee shops, obviously we do a lot with coffee, but usually people are okay with looking at numbers that are above the line, like they're okay showing their employees, hey, this is what we made and this is what it cost us in COGS, but they don't want the full P&L. And I get that, it's because it's like, am I spending places? Like, it opens you up to all kinds of critique where people are like, what's your travel budget doing right there? Hey, what did you spend on equipment? Like what, all these little tuck-ins that they've been maybe secretly been like doing personal expenses into for the last decade, and that is, it's a little bit unnerving, but I think that I'll always try and tell people coming into it, hey, listen, I have the same conversation with every guy, with every gal that lets me into this level. So just know everybody feels the same way about it. And you want this to get better, but if you don't pull off the Band-Aid, like, we're not going to be able to make it better. And just trying to give people that courage to be able to say, you know what, I am willing to make this better. Any other thoughts you guys have on that? I know probably we've all experienced that at some level.
In my personal and our businesses, that was the first thing I was handing over. I'm like, I love numbers, but I want to see after you get done those numbers. Like, I'm not into the nitty gritty. You should be like, the loft. I'm like, yeah, that's business expense.
I love it. Ben, what about you, man?
It's always, for some reason it's taboo. Like it's always the most taboo in any business. Like, don't ever talk about the finances for some reason. Like everybody loves to talk about sales, but like the actual back end is always the most taboo. So if you can get a CEO to like let you into their inner sanctum, it's great, but be respectful while you're in there.
I think too. And so when Tara and I were building this content initially, when we were first rolling it out, there are two different sides to finance. There's AP and AR, right? AP is accounts payable. That's how you're paying people. Accounts AR is accounts receivable, how you're receiving payments from people. And we just talked about, if you want your CEO to trust you, if you want him to be able to entrust you with the keys to the kingdom, I think a couple of things have to be lined out, a few things probably, and that would be strong processes, right? Clear visibility and reporting, and then all those things should lead to automation as you grow. And that's what we're going to talk about today, especially in regards to accounts payable. We're going to start there and then funnel it back into accounts receivable, monies received. But I think that really, if you want somebody to entrust you with something, you got to prove to them you're not going to drop it, right? Like you got to prove to them you're not going to F the thing up, like, because if they hand you this thing and you're like, whoa, like you're bobbling the ball, like this is not where they want you to bobble the ball. You know what I'm saying? Like maybe they'll give you some testing grounds on things that are not very critical. Maybe they'll let you, like test your merit or your ability on things that aren't going to like break the business. But finances is one of those things where it's like, do you really know how this works? And because you could send me down a trail and maybe you're not even touching the money, but even just the reporting and the things that you're showing them, you could be telling them a narrative that they're going to make decisions on in the business. And so if you don't know what you're doing in there, I think that it can lead to a lot of anxieties for CEOs they hand them off. So usually where we would suggest strong processes start is with just very, very early on realizing just vendor communication, like when we pay and how we pay. That sounds so basic, but a lot of people are still knee-jerk paying. You know what I mean? As invoices come in, we pay them. Invoice comes in, we pay them. Invoice comes in, we pay them. Invoice comes in, we pay them. But and not only like when we pay, but how we pay. Like invoice comes in and I pay whatever method they tell me to pay. You only take a credit card. Oh, you want me to send you a check? Oh, you only take an ACH. Instead of realizing, no, you have the power. These people want to get paid. I mean, so you get to set the rules. And so early on, I think that what we've learned with people is set a cadence, set a rhythm. You know what I mean? We only pay every 2 weeks.
Yeah.
We only pay twice a month, whatever it is that you do. And that way, whoever's managing your AP has the time to ramp out all their processes to make sure that everything is being categorized correctly as they pay it, make sure that everything's going the right places. And then I would say too, like how you pay, like don't let the vendor tell you how you're going to pay them. You tell the vendor how you want them to be paid. And so a lot of that can come back to setting up consistent platforms. Like you don't want to, especially if an owner, a CEO, a visionary is going to hand off the duty to somebody, they're not going to want you to have every single key to the entire kingdom. Like button it down to just one. Hey, this is how we pay people. And it happens this way every time. Taryn, do you have thoughts on that?
Yeah, I love the part where you just tell people how you want to pay them. Because as you receive invoices, you'll get lots of requests like, you can pay me here, you can pay me here, send a check here. So whenever we're onboarding new vendors for clients, we'd always create the standard response. This is how we pay you. We tell them why we pay them that way, especially if you're using something that's got zero fees, zero for the sender and the receiver. We got to hold up for Daryl.
Sorry, real quick, Taryn. I don't want to interrupt, but Master Sensei, thank you for gracing us with the presence this morning, 10 minutes late. It's not a big deal. 10 minutes late is not a big deal. We're not gonna bust you up about that.
Kimberly, Taryn, I'm here now. Aaron, you can.
Daryl texted me earlier and he goes, "Hey man, I'm hustling. I'm running late." And I sent him this gift back that said, "Why do you bring me your excuses?" And then he sent the one back to me from what is it from? From
Despicable Me.
Despicable Me, where the little girl's like this, and she's like, "This is how it feels when you're numb at the dentist." Because yesterday I had to cancel the membership, I had to get a root canal. Such a anyway.
It had to happen.
I wish you could have seen the smiles creeping on everyone's faces when that picture comes up. Everyone's like,
And it will be, is that what it was?
Here it comes. Anyway, sorry, Taryn. I'm so sorry that Daryl rudely interrupted. So Daryl, we're just talking about accounts payable, accounts receivable, finance, and how it's the most sacred thing for a CEO or a visionary to hand off, but probably not the thing that is their highest brilliance. And it's probably the best thing you can do to help them get out of it, but it's how it's a sacred cow. It's a hard one for them to let go of. And the best way to do that is to give them strong processes. So we just talked about how we pay and when we pay. Is one easy way that we can start showing a CEO, a visionary, hey, we've got this. And usually it's like channeling it down to just one. Hey, we pay every 2 weeks, or we pay twice a month, and we pay using this vehicle. And then Taryn, you were saying, as we're looking at vehicles,
boom. Tell them how you want to be paid. Tell them when to pay. So just give it straight up to them. Let them know why it's a benefit to be paid that way, especially if you use an ACH.
Yeah.
No fees for the sender or the receiver. We call that a win-win.
That's right.
Win, win, win.
Win, win, win.
We've even created little graphics, calendar graphics. Hey, you need to have your invoice in on this date. We pay this date. So you can send them that. And they know exactly, like, if they didn't get their invoice in, you told them when it needed to be in, they're going to have to wait until the next payment cycle. There's always people that balk. There's always people that say, hey, I actually need this now. My house is burning down. I need this to pay the firefighters to put it out. So you might end up with one-off situations where you approve something, but at least, 95% of the time you got people following rules, and you can't say, well, you missed the pay period. We're gonna have to pay you at this date.
What I'll usually always do when we roll this out with vendors, because Taryn's right, like everybody chips their teeth, right? Everybody's got a reason why they need to be paid at this. Everybody's got a reason why you have to pay using their payment vehicle, whatever it is. But I think that bottom line is, hey, I want my team to be most efficient. My team is most efficient when I give them one channel that they're receiving all payments through and paying all payments out from. And on top of that, I don't want them to be knee jerking all the way through the week. Every time a new vendor sends me something, they got to get in there. And then it's like, pick it up and put it down, and pick it up and put it down. I can just create 2 times a month or every 2 weeks, when my AP person jumps in, identifies all the invoices, gets all the clearances, executes all the payments, then that's going to take them a couple hours in one condensed area of time, rather than a couple of hours stretched out across all throughout a couple of weeks, and then distract them from all the things they could be doing throughout the weeks. So what I'll usually do, and Kimberly, I'm going to get to your question on payment vehicles. I'm going to get to that next. What I'll always say, be generous with the vendors when you tell them. Say this, hey, listen, we're doing this to keep it clear for everybody. We have a lot of coming and going around here. So these are the dates we pay. Send me your invoice whenever you want. I'm not telling you you have to bill me on those dates. Just know that wherever it falls in the cycles, you're going to get paid on the closest pay cycle. So go ahead and submit it whenever you want to submit it. Don't get thrown off on your timelines. I don't want to impose myself on your timelines. Submit it whenever you want, but just know this is when it's going to get paid. And then that way they don't, because people freak themselves out. And then, I watch all the finance channels, right? We'll always set up like a finance at Pedro a day, or a payments at Advance Your Reach, or whatever it is. We'll always set up an email address that everybody's sending to. That way it's all encapsulated in one spot. And then I can put one person on going and data mining out of that email anything they need to. But I'll watch all the chats early on, all the emails that come in, every reason, like Terrence said, every excuse they've got for what, they've always paid me this way. No, we've got to do it. No, I need it because of, but if you can just get people to understand, listen, I promise it's going to be better for you too, because then you can bank on when you're going to see payment from me. Like that's the surety. Is a lot of people are like, are you going to pay? It takes off that nudging of them having a nudge. No, you can expect these 2 days every month or every 2 weeks on this day. We'll execute payment. You'll see it in your bank account by X day, especially if you move to an ACH model. I will also say, and just know this, Kimberly, I'm not ignoring your question. I'll tuck it into my very last section. I would always say 2 people is always important too. Power of check and balance. Usually as a CEO hands something off, what he's always thinking of, what she's always thinking of is fraud. Oh, great. I just gave them all the access to my bank accounts. Now money's just gonna start disappearing. And those people, they just leech it out quiet, and they just leech it out small, and they've got all their little tech right there. Everybody's got these voodoo witchcraft fears about how money's gonna leave their account. So I would say if you can create a power of check and balance of 2 people in the middle of it, I would say 1 people that's receiving it and preparing everything to be paid, and then 1 person that's actually executing. That way nobody has both sets of keys. And I know, Taryn, we set that up all the way throughout, whether it's affiliate reconciling at the end of the month, like 1 person that's going through and really needling down on all the payments that need to go out, but then a second person that pays. You want to talk to that for a minute? Just power of check and balance?
Yeah, it's super important. And I know there's even been situations where people are like, well, why do we even need to do that? And then we force them to do it. We're just like, listen, if you don't have a second person set, we're going to be that second person because it's super important. It's really easy. It's more of for eye fatigue too. If somebody's entering 20 invoices in, they might accidentally hit 5,000 instead of 500 in the line item for how much money to pay. So when those second set of eyes are coming through, they're actually double checking invoices and amounts, being like, oh, whoops, that should have been 500. Right. Simple mistake. You can't really beat somebody up for it. But it's just goes to show the importance of having that second person in there, making sure everything was keyed in correctly.
And Ben, you're gonna dive. Sorry, who is that?
Oh
is
yeah,
that
and for the fraud side too, just making sure there's no weird things in there that are like he's paying himself $2,000, or what's this invoice for from this random vendor.
it's so easy to tuck yourself in somewhere if you're trying to be fraudulent. You know what I mean? Like if you've got 30 affiliates that are being paid out, it's so easy for somebody to drop their name in with a dollar amount and it's just get overlooked and just pay, you know. So that's why it's super important for one person's putting it in and then one person's executing. That way nobody holds both sets of keys. And that way, especially for me, as we do it for all these different clients, like I don't want Ben to be on the hook for something. No, that's Ben's not going to hold all the keys. Like I don't want Ben to get hung out to dry by this amount of money leaving. Somebody put them all in, we'll review, and then we'll execute once we realize we have, you know, approval from the decision maker. Ben, I know you do that. You and Taryn both do that with affiliates. You do that every single month. You want to talk to it at all?
Yeah, I mean, it gives me peace of mind. If I miss something, Taryn's gonna catch it, or vice versa. Yeah, I'm not like, shoot, I just paid somebody $10,000. Now I have to go back to the finance team and CEO and say, hey, sorry, you're gonna be $9 grand short this month because I overpaid by $9 grand or something, or whatever it may be. That's the worst. But not only that, like it's good to have somebody who knows, like a check and balance, who also knows the business well, who can spot something and say, hey, that doesn't look right coming from the vendor. Like, because that's another thing, you have to keep your vendors in line and make sure they're not overcharging you or they're not messing up on their invoices.
Yeah.
Or even affiliates for that matter. If an affiliate, like if traditionally we have 30 affiliates and it's usually about a 30K or 50K payout, and then the next month you have one affiliate come in who's done 30K on their own, like you need somebody to have eyes to go, wait, that doesn't really look right. Is that correct? Or is that vendor charging us? It seems that they're charging us 20K more than they usually do. Is there a reason for that? And it really is nice to have that check and balance, so that if one misses it, somebody else who has a little more knowledge of the business can go, okay, this doesn't look right, we should dive back into this.
Yeah, I think it's so easy, like Taryn said, to miss the forest for the trees. When you're just in there and you're just clear cutting, like you're not watching for the detail. You're just trying to get the work done. You're not asking the big picture questions. And that's the two seats I would recommend, is somebody that's going to get in there and do the heavy lifting. And then somebody that hasn't been encumbered by all of the heavy lifting, who can then from a 30,000 foot view look and say, hey, that looks weird. Can you tell me why that is? And then ask that person, who is probably your knowledge base source, to dig into it. And they bring back to you an answer. Okay, yeah, I approve that. Like that's the power of check and balance, the power of approvers. So I'm going to show you just some tools that, you know, we always start free and then move up to expensive, or expensive is probably the wrong word, always move up to cost. So this is the free way that we created. We call it the Payment Master. And essentially it's a collection. Somebody would be receiving in an inbox, like we said, finance at whatever your email address is. You have vendors that are sending you in invoices. Send them here. And that's where you tell everybody, nobody mails you stuff. Nobody does, like, email me your invoice. If you want to get paid, email your invoice. And that way it's all essentially hubbed into one spot. Obviously, if you have utilities, there are different things that may cause pain point, but you can actually set up utilities to email in invoices as well. So thinking through those different things, but then somebody who goes through that inbox and lines them out on a sheet like this of date received, what the invoice is for, who the payee is. This is actually one that is for a real account, so I didn't want to show you all those, what the amounts are, and then approval, you know. And we set up 2-point approval initially because the visionary felt like he wanted visibility, but we hardly ever saw him get involved like that. So then what we made was his right-hand person, the approver, you know, because she knows those details. And so she would go through and give us the approval amount. Sometimes it would match. There are other times where it didn't match, like Ben said, where she would call out, hey, there's something wrong, or like a hold here, like, hey, hold, I'm not approving that, not quite yet. And then Taryn would come in behind it and say, hey, I've received approval, I've done the due diligence that was requested. Usually the way this would work is, as Taryn would enter it in, Jess would say hold and give Taryn some directive here in the notes column, and then Taryn would go through and answer those questions. And once he got that answer back to the decision maker, she would approve it, and this would all go through, and then we could fund. So very, very simple. We've actually evolved this document even more so over time, where we actually drop the invoice. Oh, you know what? The invoices are buried here, right, Taryn? So what we would do is under the name, we would drop the invoice. So that way, if anybody who's going through wants to look at the invoice, they can see it. Now, obviously, a system like this, and then after, this was reconciled, this entered into QuickBooks, this is a spot where there's issues. We just created a simple color key at the top. This is a very manual, very laborious way of doing it, but it's a way that whoever's the boss does not have to be involved. You can put one person on it, take some, maybe an hour of prep, couple hours maybe to go through everything, enter it all in, but then all they have to do is go to one spot, put their eyes on one thing. Yes, 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 yes. No, Taryn, go back and look for this. Yes, 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 yes. Taryn, this amount looks wrong. Will you go and ask them about this amount? And then Taryn can go, whoever the second person is, can go back and have a conversation with the vendor, bring back the answer, and then it's approved, and then payments can be executed. So this is a very simple tool, but it's a tool we've rolled out with quite a few different clients at the very beginning before they wanted to put dollars at a platform. Taryn, do you have thoughts on this you want to talk about?
I think just an extra note is you see other names in there approving it. So they did also introduce at some point director approval. So that feeds into the fact that if you're finance or operations just approving amounts, you don't actually know what the invoice was for. So somebody in marketing asks somebody to fix their website and they send an invoice for $3,000 and we're like, yeah, it looks correct, but we don't know what it was for. So we need to make sure the marketing person approves this invoice, that it was what they, either negotiated or expected the amount to be, and that they have approved the invoice, so that then we can approve the invoice just on a statistical matter.
Yeah, that's good. Any other questions or feedback on the payment master form? So next step beyond the payment master would be if you actually automate it. Like Taryn said, once you get to a place where you have directors that are approving things, sometimes it's nice when you can put it all in a platform. That being said, we've run this system for years for people before we ever invested in a platform. But once they do move to a platform, there are a couple different ways you can go. Bill.com is a great one. They're owned by Intuit, so it integrates well with QuickBooks. Bill.com, the benefit is people can, I think they had a graphic, maybe that was a different one. But people can email in their invoices actually to a Bill.com email address. So maybe it's payments, Daryl payments at Bill.com. And the way it works is as people email that in, it actually stores all of those in a spot for you, just like an inbox would, but then you can go through them and needle through them there, clean up some of the stuff there, and then make those into a bill. So change an invoice into a bill to be paid. And then the bill is what you send out to approvers all within Bill.com's platform. So then the approver can go through and say, paid, pay, and execute straight from Bill.com. And then at the end of the week or the end of the quarter or the end of the pay period, however you want to do it, it'll reconcile itself with QuickBooks based on the different categories and how you categorized out. I want, per my chart of accounts in QuickBooks, this line item to be associated with this expense line item, and it'll all sync up on the backside. So Bill.com is a great check and balance tool where you can get two different seats, one person that's receiving, one person that's executing, keeps everything nice and clean. Also, there have been questions of why wouldn't I just use QuickBooks? Like, can I just do something really similar with QuickBooks? It's true that you can do something like that with QuickBooks, but you're also then giving your first person all access to your QuickBooks. And a lot of people aren't comfortable giving them complete access to all their financials. This silos it down to a very specific duty. All they're doing is receiving invoices and populating to be executed and paid without seeing all the back end of how your QuickBooks works or whatever your finance vehicle is. So it's nice when you can kind of drill down and say, I only want, maybe the CEO is like, oh, this makes me really uncomfortable. And you can say, well, it's okay. Just let me do something like a Bill.com where it takes in all the invoices and we can give you approval and you can go through and approve them all and pay them. The other nice thing about Bill.com, it's all ACH. Right? So everybody has to send you in. They set up their own accounts. You don't do that for them. You send them an invite. They go through and they fill out all their information to receive ACH payments. And then it's all funded. And that way there's not the checks. There's not what, am I paying this with a credit card? It's a very, very simple system. I pay everybody by you attaching your bank account and me attaching my bank account, and funds pass from me to you through Bill.com. Any questions about a Bill.com scenario? I'm going to show you one other tool. Nexonia, I felt like was next level when we began to roll it out. And I know that the vendor or the client that was using it has actually moved on to something else over time. But Nexonia was really cool because I felt like what it did that Bill.com doesn't do is you could actually pull payroll into Nexonia as well. You could pull vendor payments into Nexonia, and you could have multiple approvers, where it all synced up really succinctly with, hey, we're collecting our time this way, connects back to Nexonia. Nexonia would push it out to the approvers. The approvers would go through and say, yes, 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 yes. And then we could execute payment on it. So a very, very similar system as Bill.com, but I would say a little next level when it comes to how many different things you could do it. And it wasn't just invoices coming from vendors, but we could pull out across a couple of different platforms. Taryn, do you want to speak to that one? I know you were right in the middle of that for a lot longer than me.
Yeah, that was a fun one. So as approvers, once you start getting your approver channels, they can only see the people directly under them, or they can only see the invoices assigned to them. So it's real great clarity on not giving them too much information. And Nexonia, it was a lot bigger of a bucket. They did the timesheets. They actually did PTO too. So their directors can approve their PTO requests. It held PTO banks too. So if you're getting into that area of employees on paid time off banks, it held all that information, and a director can just log in every 2 weeks. They can approve all the timesheets, they can approve PTO requests, and they can approve vendor invoices under them, and then they'd be out. So really it was to help streamline director approvals and the frustration of them not approving things when we needed them to.
I think the only downside I saw with Nexonia was that you didn't execute payments from Nexonia. That's where everything was reconciled in, but then we would still have to move over to a payment vehicle. And this particular client used JustWorks. JustWorks is just a hub. They call them PEOs, which essentially is just a centralized hub where you can execute payments from, both payroll, all your vendor payments. But because they're doing it, it's like a Paychex as a PEO, because you're doing it within their hub, they can also give you some extra bonuses and privileges of, hey, health insurance, we can get you really cheap because we're doing it for all of these companies nationwide. 401ks, we can get you in on some pretty sweet deals that smaller companies don't usually qualify for because we're covering over all of these companies. So you do get some cool stuff out of a JustWorks, but we needed both. We needed one who was reconciling all of the invoices coming in and getting all the approvals. And then based on that, we would move over and execute payment from JustWorks and execute payroll from JustWorks. So it was a twofer. So Bill.com, you can receive the invoices in and actually execute from Bill.com, but it's not quite as robust, all the different things you can do there. Nexonia much more robust when it comes to how you can approve and how you can assign and what people can see. But the downside would be that you still would need some sort of executing vehicle like JustWorks. Taryn, did I lay that out straight enough?
Yeah, that's perfect. Nexonia is one of those next level apps where they actually onboard you into it and build the app custom to your company with all the rules and permissions you want. And then they hand it over to you. So it's not, you just get logins and you start clicking around.
That's great. That's a really good point. And I will say too, when we onboarded Bill.com gave us a sales rep and they did some initial setup for us as well, but definitely not near as hand-holding as Nexonia. Nexonia, I was really impressed with how they integrated us and made it so custom to what we were looking for this client. I felt like it checked off on a lot of boxes. I will say this, whenever you move from your hodgepodge way of doing it now, it's going to feel foreign, right? Like you probably Frankensteined your perfect, all of your idiosyncrasies are spoken to in your Frankenstein, right? Like this tool for this, and this tool for this, and this sheet for this, and this, and so you've got this like science down on how you're handling it. The problem is usually Frankenstein doesn't scale well, so if you want to hand something off, it's really hard to explain to people, or you're going to have to give them a bunch of access to a bunch of things that you probably don't want everybody to have. So the realization of, hey, in disengaging from the old and engaging in the new, there are going to be some uncomfortable pain points. Like it's probably not going to do everything that you ever were able to do with the last thing, but in a new system like a Bill.com, in a Nexonia, moving to a JustWorks, moving to some sort of platform where you're executing payments from, the beauty is you can hand that off now, and it's a closed loop system, and it's check and balanced, and you don't have to be nervous about it. A lot of times what gets people into trouble is trying to hand off a Frankenstein. And then it's like, you've given people too many keys, you've given them too much autonomy, and now they have too much control. And I know I just talked to a friend a couple of weeks ago who is dealing with fraud in his business. It's been happening for 2 years. He was the finance guy. And this guy, I know, like I have a lot of respect for, a lot of love for, he didn't see it coming. And he only started recognizing it when he's like, wait a minute, what's that? And the guy even had a good reason for that. But as he dug deeper and deeper, he's like, no, that doesn't hold up. And then he full court pressed the guy on, hey, this is what I think's going on. And the guy broke and he admitted it. But now he's into him for thousands of dollars, and he's got to go after this guy to pay him back those thousands of dollars. And he just lost this like main finance guy within his company, which creates this big vacancy in his company, so it's like, what is he? So he feels the pain, not to mention all of the personal, like your finance guy is usually one of the guys you trust the most. So there's all that friendship, equity that now has just been, you were lying to me the last couple of years while you were robbing me, like that, all of that pain. So I will say solid check and balances, really making sure that you're covering your bases. These tools were designed for accountability, and I would really advocate for that. Any questions about accounts payable before we move to accounts receivable? I know this isn't the sexiest topic, but it is a topic.
So I had a question. Doesn't Square have that ability now, like with all the upgrades? Because I don't know a lot about it, and this is more, I guess, more suited for Steven, but I saw that I could give my instructors and whatnot logins of their own. Does that lessen their footprint on the overall system? Or
Ben, I know you've been in Square more than me, and I think that I know Square we were looking at Square before we shifted to Touchpoint for roasters on accounting for time, all those different things. It seemed like they dinged you for everything that you upgraded them into, and maybe they include some things if you're already upgraded, Daryl. But Ben, do you know much about what Square allows you to do and not do?
It's been a while since I've been in it. It sounds almost like they have giving them a login to actually be able to run like a POS. Like you would have, if you had a POS in a till or a cash drawer, you would have separate logins for each instructor, so that if something goes missing between 12 and 2, you can see that, okay, this instructor was logged in, they had access to the financials, and it was probably them that messed with something, whether it's fraud or not. When it comes to invoicing, I haven't dug that far into Square's invoicing side. I would be really curious though, if you want to send me some logins so I can start pillaging around.
you see what he did there?
Yeah, I do. I do. We got it recorded too. So if anything's missing, we got it recorded. And I will say this too, and it's something just to consider, Daryl, as you have your own business, as different people have their own businesses. I will say another main step in this direction that's really good is moving to a password security system as far as how you share your passwords. LastPass is great because it's free up to a certain amount of sharers, up to a certain amount of things. But even when you start paying for it, it's not super expensive. And the nice thing then is that you can give people passwords that way too, or if you set up their own user account, you can share them that way instead of having to text them or send them or give them your own unique user. That way you can limit their controls. But Ben's trustworthy, but let's make sure we button him down a little bit. Kimberly, thanks for dropping the quick article. Daryl, looks like Kimberly's looking out for you. AR, let's move. Oh, sorry, Kimberly, did you have any questions? Accounts payable? I know you had that initial question. Did we answer your question?
Yeah, I was curious about the vehicles. Like we've had I don't know. It feels like it's a lot of complaints, even if it's like 5, but out of like 45 people, it feels like a lot because our people who work in our company have to have a QuickBooks subscription to be able to submit the QuickBooks invoices. And that's like $25 a month. And now most of us are business owners. We're going to probably have QuickBooks anyway. And that was the mindset, but it's come up several times where people are like, is there any way around me having to pay $25 a month for QuickBooks and $10 for every invoice? Mm-hmm. Like that's, $45 a month I have to pay just to get paid.
Yeah.
And some of them are hourly, and they're not like, that's a pretty good chunk of change when you're just working hours here and there.
Yeah, I do think that the beauty of like a bill.com, obviously Stephen would be the one that takes on the cost initially. I think it's like $49, $50 a seat, so we just bought one seat initially. For the client that we use bill.com for. And then the nice thing about bill.com is it does sync back up to QuickBooks. So you can still get to sync the same way QuickBooks invoicing system would work. But the beauty of that is that nobody has to pay anything except for that $150 payment. And then everybody else has to sign up for bill.com, but it's a free account. And then you just send in your invoice, whatever way you want to send it, like create your invoice, however you want to create your invoice, and then send it in, and we'll pay you from this payment vehicle. And now obviously they have to wed their bank account to bill.com, but bill.com is a secure environment. Like it's a big deal, there's not fraud going on there. and then they can just know they're going to get funded. So that would be a way where you could take 25 bucks being personally, I love and I hate QuickBooks. You know what I mean? Because I feel like I've been doing it for the last 30 years on QuickBooks. So I feel like they've gotten so much money out of me over the time of QuickBooks, but I feel like everything is a nickel and dime, and their percentages, I feel like, are just a little bit higher than everybody's. And then they know that they've got you. So what are you going to say? You know, that they would charge 10 bucks to send invoices feels like robbery. Like, what are we talking about right now? Like, to send an invoice, I've got to pay 10 cents. Seems weird, you know, like, so something to consider.
Yeah, Kimberly, are you saying that the people that are sending you invoices, you're asking them to have their own QuickBooks account and
Correct.
send you QuickBook invoices?
Yeah, because that's kind of how it works with QuickBooks. But if we migrated to bill.com, which would take some of my sales skills, if we migrated to that, like the people who were fine with it and already had QuickBooks and that was their routine, it wouldn't change anything for them, right? And then those
Right.
like 5 or 10 people who are really not okay with it, and then new people coming in, it's like, okay, fine, just send it however you want, whenever you want, we'll pay it on this day. I think that could be really helpful for us.
Yeah, it's hard to get people to all send the invoice the same way. So you just tell people, as long as you're sending a PDF invoice, all these platforms will read a PDF.
That's right.
And they have invoice templates that are Excel sheets.
Yep.
And you just save those as PDFs and send them in. And then you can then pay to their bank account. So you don't have to pay through QuickBooks. And then the bill.com will reconcile with your QuickBooks, as it will read the invoices and create the bills in QuickBooks. And then it will read the payments and match it to the bill for you. So then it's not requiring QuickBooks anymore.
And that's always something that Collab Team can help us set up on. Like, as far as we've done, you know, we've done enough of them. So if it's just an issue of setup too, that's there.
Yeah, adding that to our list for tomorrow, Aaron.
You and me, Kimberly, we'll talk more about that. That's awesome. All righty, let's move to AR, accounts receivable. So this is how you're getting paid, right? So like, this is what paying people is one thing. Cool. Let's get that dialed in. I guess I don't even like paying people all the time, but I know I've got to. That's a necessary evil. But I want to make sure I'm getting my money. That's usually most CEOs like heart and soul. So a couple different ways. Once again, coming back to need strong processes, need clear visibility and reporting, and then leads to automation as you scale and grow. So I would say strong processes around AR specifically is a way that you're sending business to business invoices. We just talked about that a little bit. Like, however you're sending your invoices out to be paid, you need to have, you know, some system around that. Business to consumer product payment plans, you know, as far as how you're, like, a lot of us are in the business of getting payments from individual people, not other businesses. So what's the vehicle for Daryl? It's Square. You know, for some of the rest of us, we use Infusionsoft, or we use whatever it is to create the vehicles of how payments are going to come in, especially on payment plans. And then if you are taking payment plans, how you're handling things like failed and collections. And I know Ben's going to dive pretty deep into some of that stuff next week. But I at least wanted to acknowledge it here on those are some of the main 3 things I would say you want to have your bases covered: how you're invoicing people, how you're setting up your, you know, your products within whatever your vehicle is on your platform for selling online, and then how you're reconciling your payment plans at the end of every month. Taryn, do you want to speak to that at all?
Yeah, it's a good buckets to put them into. I think, you know, as we first went into AP and now going to AR, it falls in that as the CEO, you really want to know what's coming in and what's going out. So you break it into these buckets. Okay, what's going out is your payables. What's coming in is your receivables. And from there, they're like, okay, out of our receivables, what's future receivables and what's past due receivables? So you really want to look at what's our income we can look forward to based on payment plans, invoices we've sent out with future pay by dates, or even upcoming promotions, partnerships, or agreements. And then you have what's your past due receivables, what's money we should have been paid but failed and we haven't, that we need to proactively work at.
Yeah. So I'm going to show you guys one of the ways that I would say for clear visibility and reporting in this regard is, you know, we advocate pretty hard for EOS and the scorecard system when it comes to watching numbers. Obviously, most people, when they think of finance, they think of a profit loss statement, which is great, but profit loss statements usually only happen at the end of every month. And then it usually takes your bookkeeper at least a couple of weeks to tie them off. So then you're looking at everything 6 weeks in arrears of when the actual activity happened, which makes it hard to pivot off of. The nice thing about a scorecard is, especially from the finance side of things, you can start looking at different areas of business in a week over week way. And some of them have to be monthly. Some things can only be tied off on a monthly basis, but otherwise there are parts that you can look at on a weekly basis and see, how is my profitability for the year looking? And on a monthly view, how is my collections total by sales? So that one there, we had a report tied to that you could view from there. Collections total and outstanding AR, AR reoccurring over the next 30 days. So that's accounts receivable, money coming in over the next 30 days. Full future receivables. That's things, maybe we sell at an event and we want to know, hey, how much money total are we going to get once all payment plans are fulfilled? Because that's a good number you want to see coming. Gross profit, which is actuals to forecast. That's us holding ourselves accountable to, we forecasted this much money on Q1. How are we doing according to the forecast week over week? Operating margin, revenue, actuals to forecast, income, other incomes, commissions, fees. That's a big one that you want to be like looking out for, especially as you start getting into affiliates. Like who should be paying us what based upon an affiliate plan we set up with them. And that's probably going to take somebody that's managing that. Refunds, this is a big one. Like who are we refunding? The amount and number of customers. Refunds total year to date. Failed and disputed or defaulted. Like that's a big one. We're going to talk about that more next week. Recaptured is how many of these fails did we return back into the fold? How many people did we bring back into the buckets? Percentage of recaptured. Disputes. We all have them. People that dispute charges that hit their card, and you're like, you signed up. Like, what are you disputing? But they're like, it didn't turn out the way I thought it was going to. Whatever it is, like you have to have somebody in place that's going to fight your disputes for you. And then so number of disputes, percentage of disputes, dispute win-loss record, and then average collection period. So these are just an example of some things that you might want to consider. Once you've got your L10, you're doing it with your leadership team level, and then you start doing a finance L10 where this is very specific finance numbers. Your finance department is talking through these metrics every single week. And then usually the representative, the finance director, would take key metrics from their finance scorecard and rattle them up to the leadership team level, is how this would work from an EOS model. But yeah, you want to talk about Gravy for a minute, Kimberly? I know that you guys have been using that lately. Taryn and I looked at Gravy early on for advanced read.
Yeah, we're actually going to bring it up next week too.
Oh, well, let's save it for next week. So we got some good stuff. I don't want to rabbit trail.
Yeah. Perfect then. Yeah.
I'll be here.
We would love your feedback though, because I think that you have some real ground level intel for that. Does anybody have any questions? Or Taryn, Ben, I know you guys look at finance scorecards a lot. You guys provide a lot of these numbers for a lot of our clients. Do you have anything that you want to add to the scorecard?
I think I will say I've been in L10 department meetings for every type of department, and the finance scorecard is always the most robust and time consuming because that's where you really drill down on your numbers, and the finance person going back to their leadership team really has to have clear answers. So you tend to see this scorecard to be the biggest and probably takes the longest to go through.
I will say though, the reason you want something like this is when the CEO asks, you've got solid answers to come back to, right? Because all of us have been caught flat-footed, right? Where the CEO asks us something, we're like, oh, let me get back to you. And then you have to go dig, and then it takes you hours to go dig into whatever they just sent you down, and then maybe you bring it back and your answer was right, but it just took you all that time to data mine it and bring it back. The nice thing about a scorecard is you've been tracking all these metrics so long, and when they ask you for that one thing, you're like, oh, let me open a scorecard. Okay, this is the number for you. And then at least you have a tracked number, you can show them something that gives them more, right? We talked about what brings your CEO peace is knowing that you have solid reporting, solid systems, solid processes. They probably have not had any visibility at all into your finance L10s. They don't know what's going on in the finance department. So they've got all this anxiety, and they're like, I hope somebody's watching this. And then when they come to you, you're able to say, oh yeah, we're actually really watching it. Let me show you this. And then you open up something like this, and they're like, they get a little overwhelmed by data overload, and they're like, oh, you guys really are watching it. That it gives them just that peace of mind. Sometimes just showing them the scorecard, just showing them metrics, but maybe they have questions about certain numbers, and then no problem, we've been tracking that. Or if you have to go dig deeper, at least you've been tracking the channels well enough that you know exactly where you need to go to dig deeper, rather than it just being a Pandora to go step into. Ben, anything else to add?
Love it.
Love it.
Want some more of it.
Oh, no.
That was
Alrighty. The final one, this should all lead to automations to scale as you grow. And the automations, that typically we'll lean into from the accounts receivable side of things. We've talked about QuickBooks quite a bit. It's just a system that's universal, something that people know. So QuickBooks invoices, all those things are nice to be able to send out for getting paid from vendors if you already have a QuickBooks account. But like Terrence said, you can send out anything that you want. I would just say, ask yourself, how do you want to receive it? For me, especially if it's large amounts, I'm going to want to receive that. Probably ACH is where I'm going to pay the least amount of fees. If it's not too big of an amount, then I'm okay if people put on their credit cards, but realizing if I send that out, I'm going to be paying the 3%, right? Like they're going to take that off of my invoice, which never feels good. So just ask yourself, how can I retain the most amount of money when I get paid? That's how I always ask, So I actually have been rolling out, and like Daryl was one of my first people that got to experience it on HoneyBook. HoneyBook's been a pretty good experience for me lately too, on just automating invoices and sending out invoices. And the thing I liked about it is I can attach agreements to an invoice, so they can go through and they can sign all the agreements. And then once they execute the agreement, they can execute. But I also have control to say this client can either pay by credit card or ACH, or if I only want to receive ACH payments, then it forces them down that vein of having to pay me ACH. And so some of our higher retainers, like I don't want to pay $300 on fees. Like that's not what I want. So I'm going to ask that person to pay me by ACH. Other people where the invoice is smaller, I'm fine. Put it on your card. It's no big deal. Like let's just pay to play. But HoneyBook's pricing and percentages were pretty great. And for me personally, I was using Adobe Sign to send out all of my invoices because I got more signatures out of Adobe Sign than I got out of DocuSign. But I found that with HoneyBook, if I cut Adobe Sign out and just use HoneyBook for my signatures, then I actually was able to get a 2 for out of HoneyBook for almost the same amount as I was paying for Adobe Sign. So it's things to be thinking through. How do you get paid? And then I would say, obviously, Taryn, maybe you can speak to Infusionsoft and product sales. I know we use a lot of ClickFunnels. A lot of our clients use a lot of ClickFunnels, but typically you want your CRM to control what your products are sold through. And so, Taryn, I don't know if you want to talk about that for a minute.
Yeah, I mean, ClickFunnels has their own payments, but it's when it comes to the payment plans is where it goes down a little bit. Because
what does that mean? Walk me through that.
Well, I mean, we'll probably discuss that more next week when it comes to failed on payment plans, but
yeah,
you don't get that access in ClickFunnels, and you have to go directly to your payment gateway to see your payment plans and subscriptions and what's failing through there. And the payment gateway doesn't have a good follow-up process on those. You have to get some different plugins for that.